Welcome to the Family Banking Show with your hosts Rob, Derek, and John, where we dive into the world of the infinite banking concept and discuss personal banking strategies to secure your legacy and build generational wealth. We're glad you're here, and we hope this episode serves you well.
If you're interested in learning more about setting up your own family banking system, send an email to thefamilybankingshow@gmail.com. We'd love to hear from you.
Welcome back, ladies and gentlemen, to the Family Banking Show. We are your hosts, Derek, Rob, and John. Guys, how's it going this week?
Pretty good. Busy. We're selling one of our rental properties and doing a lot of the cleanup, or I should say cleanup, refreshing work, to make it show ready. Yeah, it's a lot. So I'll be happy when that's project is done and I can get it listed.
I thought real estate was supposed to be passive.
It's a lot of work. It's a lot of work, man.
I was literally just about to say that.
I mean, I guess you could have paid a repairman to go in there and do all that stuff too, but there goes your return.
But that just eats away at your profit. So putting sweat equity into the front end and the back end, but yeah, just like a lot of it's just refreshing it. You have to like refresh it up, new paint, new carpet, new trim, like fixing dents and replacing fixtures. And I just found out if one of the fans in the bathroom doesn't work, and it's anyway, late nights.
Yeah,
that's for sure.
I just had an interesting late night yesterday where my brother-in-law is proposing like a new development and rezoning of a lot he just purchased. He's a real estate investor.
Mm-hmm.
And so I went to the city council meeting where they made the final decision to show some support, and I was interested in how they do things. And a city council meeting, local government leaders, started at 7:30 and ended at like 11. And
holy cow.
They really deliberate over every fine-tuned detail, which I guess is a good thing. But yeah, that was watching paint dry for the majority of the time, and then a little 20-minute window where they were included, but yeah, different late night, not doing repair, but
you get to learn
the
about
action of local government.
You get to see how the sausage is made.
Yeah.
And what's interesting, this relates to IBC, is there are two incredibly wealthy families who have foundations in like their own family office. It was in Edina, if y'all know the area. And they were basically proposing donations to build new parks and new different things. And these families have had like 4 generations of a foundation and of like philanthropy. And it was just really impressive to see the family members themselves talk about honoring their grandparents and honoring
that's cool,
honoring the community. So I'm sure there's some sort of trust, whole life insurance, all sorts of IBC overlap in there, and they left before I could meet them. They just left the meeting. But anyway, all fascinating things.
That's cool to see it actually working.
Mm-hmm.
So
they were building pickleball courts, so not sure it's like advancing humanity, but
and it just so happens to be right behind their house.
Yeah.
So they have their own gate into the pickleball court.
Yeah, in a gated community where the rest of the public can't actually enjoy it.
Right.
Yep.
Oh man. Yeah, well, good stuff. John, you get to learn about variances and special use permits and all sorts of boring zoning code things, but
I'm surprised how much I didn't know, and that's a whole new world. So that's kind of the world you've lived in for a little while.
Yeah, it's a new language. That's kind of what I've determined. It's like learning a new language. So well, good stuff. Hey guys, this week we're going to talk about the stock market, and in particular, can you use IBC dollars, the cash value in your infinite banking policy, and participate in the stock market with those same dollars? So can you and should you, I guess, is really where we're taking this. I'll kick us off here. And the short answer is it depends, but I probably wouldn't suggest it. And here's why. when you are taking that policy loan against the cash value from the life insurance company and redirecting that most likely into a brokerage account rather than a 401k or IRA, because there's going to be stipulations on when you can take those dollars out of those accounts. Obviously, you're paying additional fees to have access to the stock market, and depending upon what you're doing in the stock market is going to determine if it's going to be a good, wise investment. So depending on who you ask, what the annual rates of return might be, or where where people think the stock market's going to go, as if we have a crystal ball, you could be jeopardizing the strength of your infinite banking policy because of that outstanding loan balance. You need to have a plan in place to at least be paying back the interest component that's going to continue to accumulate. And I've done this same thing firsthand, and it generally doesn't work out very well, just because most people are not sophisticated enough to understand what to be doing with their dollars in the stock market, or have the time frame available to really take advantage of it. So what did I do? Here was my dumb mistake, right? I went and I purchased either stocks, ETFs, or doing some options trading. And unfortunately, the market moves against you. And all of a sudden, you could be losing thousands of dollars and not really have a great plan in place on how to repay your policy loan. So that was kind of a big swing and a miss for me. Would I do it again? I wouldn't do the same thing. I would get some more specialized training for what I'm after. One thing that I'm looking at is called options trading, which I'm not sure if Rob, you or John are familiar with options trading. But it's got some strengths and some weaknesses to it compared to just your very typical mutual fund ETF investor. And it's more short-term swing type trading, or day trading, even, if you will, which could be arguably even riskier. So, tread lightly if you are thinking about pursuing some of those options, or if you've already had years of experience doing it and had a proven successful track record, that would be a great place. What are your guys' take on, can you do it and should you do it?
Yeah, I think the approach really matters. And just like you mentioned, Derek, like what is this ultimately accomplishing? What is this investment for, right? If you're just trying to throw money into a black box that you hope you get more money, then maybe we need to just step back and understand like what your goals are and understand what the investment itself is going to accomplish for you. Because if it's not improving your life today or tomorrow, and you don't have a clear picture of that, then maybe you need to define that first before putting your dollars at risk of, and this is risk of total loss, like you're talking about with options trading.
Yeah.
That's one example where you could completely lose, just like, you're gambling in Las Vegas, like you could completely lose those dollars.
Mm-hmm.
It is highly unlikely, but it still is possible. And so that would be my first question before anyone wants to before I would want to dive into the stock market, right? I generally see it as an accumulation tool. You're in it for the long haul, and that's more the, set and forget method.
Mm-hmm.
And with that, it probably doesn't make sense to leverage your policy, if you're just asking me, for the long-term accumulation build-up phase. And so I like to keep my dollars moving. I like to keep the flow of money in and out on a consistent, daily, weekly, monthly basis. And that just doesn't align with what I call like investor, goals or investor criteria, or DNA, even if you listen to Garrett Gunderson.
Yeah.
And so I think that first question really, really matters, right? You could love the stock market, you could see the percentages of rates of return and, be drawn to it and even be very educated in it, and that's great. But there has to be a purpose to everything you're doing. If you're not purpose driven in what you're doing with your dollars, then you have no idea of what success looks like.
Yeah, I'd kind of add on to that. I mean, that's one of the nice things about having an infinite banking policy, early cash value, whole life, is that you have that reservoir, that warehouse of cash of that you can draw from for opportunities. And and if if you are, the market, how it works, you have a plan, like you're saying, John, you have a plan, but you need a reservoir to move money in and out of that's always growing, no matter whether you're moving in and out money in and out of it, and you're planning it around it, and you're being smart about it, and you're being an honest banker. And sure, I think that makes sense. Use your cash value as that repository for the cash to achieve that goal. But you definitely need to have a plan. It's not. I would not suggest just taking policy loans and just speculating in the market.
Hmm.
You need to, if you're going to use it strategically as your reservoir of cash, I think that's a great place to leverage your cash, but definitely need to have a plan for it. I like to, but I don't know the stock market well, so that's a place that I just don't feel comfortable other than just, if I have any, activity in the market, I'm just putting it into something long term, like you're saying, John. S&P 500 index fund, just let it grow because I like to have something. I like to have accumulation plan and a distribution plan. And
Yeah.
so in terms of the stock market, my accumulation plans, since I don't know the stock market well, I'm just going to throw it into an S&P 500 index fund, let that grow. And then I'll make strategic investment decisions with my cash value for things outside of the market. That's been my approach. But yeah, if you need a cash reservoir that's always growing, guaranteed to grow, and compound, for the rest of your life, then your cash value policy is a great place to do that.
Hmm.
But you definitely, need to be aware of what you're doing and have a plan for it.
Yeah. One thing that I've started to think about and trying to incorporate is when I'm making an investment decision, I'm trying to think about where does this fit in the time frame component of how long I want to hold this investment for? Is it 10 plus years? Is it, between 3 and 10 years? Or is this the quick hitters? Is it a daily hold? Is it weekly? Is it monthly? Trying to allocate a certain percentage of my investable cash value when I'm trying to take advantage of those opportunities, thinking about, okay, most of my opportunities or most of the cash value should be attributed to those longer term holds. And as you get to shorter and shorter time preferences, less and less cash should be incorporated into those types of assets. So, for example, if somebody were to try day trading, it should be a very, very small portion of your portfolio, at least to start. And if you're doing swing trading, maybe you're holding it for a month to 6 months or something like that, maybe a slightly larger percentage. If you're doing something for 3 to 10 years, then again, you increase your percentage a little more. And then if it's, something that you plan on just, maybe it's the S&P 500, you're just planning on staying in that thing until the day you die, then that's a larger percentage of what you have available to you. If you wanted to do something in the stock market, that's the way that I'm starting to think about small percentages for the quick hitters, larger percentages for those longer term holds. What's your guys' take on that?
One more thought I was going to add to it is, especially now that I've been, so this is year 8 of doing IBC. I followed Nelson's plan. Don't be afraid to capitalize, and so and this is for all of our listeners. This is what you'll experience if your premium is meaningful and manageable. You'll experience this too. It'll start slow, but then your cash value will start to grow. And then all of a sudden, year 4 or so, and you can use it before year 4, but this is just my story. Year 4, you're all of a sudden, oh, I got all this cash value sitting here. I need to put this to work. And so, but then you try different things but what I've learned over those years is the investments that attract me are the ones that have a monthly return that can pay off at least the interest of my policy loan. So that I'm at, so I don't necessarily invest in something that has a 10-year speculative time horizon. I like to invest in something that's giving me immediate cash flow back that can pay off at least the minimum the interest of my policy loan, and even better if I'm getting interest plus
Mhm.
with some kind of long-term time horizon return. That's a good investment, like a net, something that makes sense, or motivates me enough to invest in it. But I really like things that pay me back while I'm putting my money in, so it's always covering that growth on the interest.
Mhm.
And so that's been my focus now, and those are the investments that I'm interested in.
Right.
And I think we're looking at the angle of leveraging your cash value for a stock market investment, as the kind of the and asset,
Hmm.
argument that Caleb Gilliams would have in his book. And I think
Yep.
that's a really helpful, approach and angle to look at it. I also want to look at it from the other angle of understanding still the process of banking. Like, I don't want to ever forget the process
Hmm.
of banking and who's controlling our capital, who's executing the function of banking in our lives.
Hmm.
That's what becoming your own banker is about. That's what IBC is about. It's not an investment. It's not a rate of return. It is
Right.
creating and controlling your own family bank, whereby you can recapture all the interest that you'd be otherwise paying out to banks and creating control and freedom in your life. And so anytime someone says like, IBC is a scam because it's a bad investment, or, just do buy term, invest the difference, like in what scenario in any of these other arguments does that help us understand how to create our own banking system with all the benefits that a properly designed whole life policy would give us? So
Mhm.
I do want to step back and just even say, like, as we even tread lightly on the path of stock market
Hmm.
conversations, that very quickly, in my experience, leads to, okay, well then why would I have anything in whole life? And I'll just buy term and be super cheap about it and invest the difference, whatever the difference is to most people. They don't have an idea of what that is, and create all this upside. But still, they haven't solved for the 34.5% that's every year leaking out of our financial lives
Right.
and creating that freedom and control. So you can have both, right? You can have a substantial premium and create your own bank and still, have exposure to the stock market. And this is kind of how we're trying to flesh that out. So
Hmm.
anyway, I do think there's a healthy balance, and especially as you have like even surplus cash in addition to your premium, in addition to your banking needs, that you want some upside with, and you feel like very clear about what it's going to do for you, and you also feel comfortable that if there's that risk of loss, that it's not going to change your life, it's not going to affect you because you've already created this really strong foundation. Then again, for my own personal preferences and understanding, that's what I would feel the best moving forward.
Hmm.
Hmm. Yep.
Yeah, well said. Yeah, so guys, when somebody's thinking, should I use my cash value to invest? Maybe not in the stock market. Obviously, we've talked about a few other options out there and what our criteria would be for those. I mean, what's the opportunity cost really that you guys are seeing in your own personal life? Um, you know, is it just the interest rate that's being charged on the cash value, or are you not attracted to something at 10%, or what's your threshold? What are you trying to gauge as far as like your personal, what is the value that you are attributing to your own cash?
That's first and foremost, it's a good question. Actually, I'm not sure about you guys, but I think about that a lot because as Nelson said in his book, when you have capital, opportunity will find you. And so we have opportunities that come before us. And that's always a question. You're analyzing the rate of return on this potential opportunity. But the main thing that what I love about my policy is that I have a cash value amount that I always will that I won't touch. It might 10 times my income or whatever your number, some number that you feel really comfortable with. That's your family emergency fund. So that's like first and foremost, what I would recommend is build up that cash value. Don't be afraid to capitalize. Build up that cash value, so you have that emergency fund, and then whatever you're comfortable with there. Then you can start making those. Then you start having the cash value to start vetting opportunities, and then you can speculate a little bit if you want to, but you have that opportunity to then vet opportunities, but you have that protection in place. Because I think that's so important. That's one of the things I love so much about this concept, the infinite banking concept, is you can protect your family first because you're buying permanent life insurance. So you're protecting your income. So it protects your family and your legacy and your estate. But then you could also then leverage it, once you have that emergency fund built up in a place that you're really comfortable with, then you can start taking advantage of opportunities that come across your desk. So that's my first recommendation is start it first, get it nice and protect your family, get a nice reservoir, and then once you're at that comfortable spot, then start making decisions.
Mm-hmm.
For me, I highly value cash flow and immediate returns, like in the form
Hmm.
of cash flow investing.
Hmm.
I don't see much value. I see some value to accumulation, but very little. So if it's a matter of like allocation percentage, for me, it would be less than 20% towards like an accumulation long-term play. Otherwise, I really value things that influence my life tomorrow, right? And my family's life here in the short term, that you then still get the long-term accumulation, ideally, if you're investing in assets that also appreciate. So another thing that Rob, you mentioned is the policy loan interest is in a sense like a good little check like
Hmm.
on our investing, right? Right now
Yep.
it's around 5 or 6%. It's like, is this investment actually going to pay me back at least what it costs to borrow, if
Yep.
not more? Like that's at least a very good starting point. Most people are like, well, if I get 5%, then maybe it didn't cost me anything, and at least I'm getting a positive return. It's like,
Mm-hmm.
is 5% really the best you can do?
Mm-hmm.
Oftentimes the best opportunity is to say no, right? Because
Right.
opportunities come and go, they come and go all the time.
Yep.
But losing money and recovering from that is a big deal, as
Yeah.
Warren would say, and many
Huge.
others. So that's kind of my approach to, yeah, like the cost of capital and opportunity return.
Yeah. So when I think about, Robbie said opportunity will find capital. Um, just in the last week alone, I've heard of three different opportunities: a hedge fund returning 20%, another private type investment, maybe as much as 40 some percent annually, and then a real estate play up at 90%. So does an 8% or even 10% annualized return, like that's kind of my thinking is like, man, it's definitely got to be higher than 10 for
Hmm.
me to use cash value to take advantage of an opportunity. And why I say that is I can take a loan and put it into my business and definitely get better than a 10% return. And I would challenge the listeners at home, even if you're a W-2 employee, but you've got a little side hustle, maybe it's flipping real estate or something like that. Can you do better than a 10% return inside your own business? If you feel comfortable with that, then maybe that's your play. But for me, that's kind of the number that I have in mind is probably 10%. Or another way of thinking is if you were to give a loan to a family member, what would you charge for that interest rate on the loan? Because you're definitely going to be charging higher than, or you should be charging higher than what the insurance company is charging in order to
Hmm.
be an honest banker. Nelson calls this charging retail. What's the retail rate for a commercial loan? And so that's kind of the threshold for me is probably 10 to 12%. for me to really take advantage of an opportunity. Is that,
Yep.
is that helpful for you guys, or what's your thoughts on that? Is it the retail rate? Is that just basically that kind of opportunity cost of you're not really touching it if it's below that?
For sure. Yeah. Don't even consider it at all if it's not at least what the policy loan is costing me.
Yeah.
Um, but then like you guys are saying, the more we have this capital, the more opportunities we keep seeing it's so even like 10%, that's just, I don't know, that almost doesn't really move the needle for me, to be honest.
Doesn't
Yeah.
excite
Um,
you.
mm-mm,
Yeah.
no,
Yeah,
no.
No,
especially when you start calculating inflation in there. It's like, all right, if we're getting charged 5 to 6% to borrow capital from the insurance company and inflation is 3%, okay, now all of a sudden that 10% return doesn't really do
it
anything
breaks
for you. It
even.
doesn't accomplish any goals
Right.
really.
Right.
And maybe as we wrap up, like I do, I'm the guy that always likes to step back, zoom out, and just understand what
Hmm.
we're trying to do here. And I always tell like my clients and just different people I talk to about IBC, even if they're not a client, like the first step to investing, like after you have a solid foundation in IBC and people understand the concept, is like is two things. Like first is investing in yourself. Like, are
Hmm.
you actually educating yourself? Are you actually
Hmm.
getting the right knowledge to make educated decisions on your investments? That could be through masterminds, that could be through just purely reading books or listening to content on podcasts and different things. We have an infinite like wealth of knowledge out there that we could learn from. And I'm looking at my book list right now, just right here on my bookshelf. It's like kind of overwhelming just how much
Yeah.
is out there that's very cheap, if not free on podcasts that you can invest in yourself and just understand where you're going with all this. So that's the first thing I'd say is stepping back and like starting at yourself, and
Hmm.
you are your greatest
Agree.
asset. So may as well like invest in your greatest asset, which is yourself. And then invest in relationships. I think that's one of the biggest shortcuts to earnings. Even these opportunities that we're talking about, Derek, with the 20 and the 40 and even the 90% probably, is those came about probably through a relationship, right? And through the right people presenting the right opportunity, people that you trust, people that you know are going to deliver on these things. So then you feel probably a lot more confident after investing in yourself and you know what's going on. And then you invest in your relationships and you trust the person of what activity is going to produce that return. You're likely going to get much better opportunities and just have much more peace of mind
Yeah.
rather than like investing in Apple stock and not knowing what Tim Cook's going to do for those shareholders and not knowing
Yep.
anything that's going on in the boardroom, but rather
Right.
putting it to you and me level and having that understanding and granularity of what's going on in this investment. Um, and then you can make the investment, and maybe 10% is the minimum floor, maybe then 15% is the minimum floor based on what you've educated yourself with. And so I can't stress enough. Like I spend tons of money just on myself every year.
Hmm.
By tons, I mean like relative to my income. It's just most people wouldn't do that. Like spend
Yeah.
10 to 20% of your household income just on like getting in the right rooms and learning the right things and meeting the right people so that you can then become a greater asset yourself for the rest of your life, right? It's not just one single return. It's like a lifelong return that you get from it. So
Yep.
anyway, that's my zoom out, step back approach again.
Yeah.
Yeah, John, you stole one of my no, you didn't steal it, but I was going to say the same thing. One of my final thoughts was, yeah, invest in yourself. Like, it, get into groups that of like-minded people, learn from people. It'll often cost you money to do some of those things, but invest in your business, invest in yourself, because it's the fastest way for you to increase your family cash flow is for you to make more money. It
Mhm.
sounds kind of like simplistic, but invest in what you know, and that's yourself. Invest in what you're interested in, which might be what our businesses are and what your business might be. Invest in those things, get in front of people, get to know people, then opportunities really start to come in an area that you really are knowledgeable about. And then like John, you're saying it's at the you and me level. Those are the ones that I like. Those are the ones that I'm waiting for. And yes, I totally agree with that. Invest in yourself, invest in your own business, invest in those things first. It would be my suggestion.
Which is how we, like us three, how we even know each other is we
Yeah.
invested in ourselves. We joined the Nelson Nash Institute group of
Yep.
practitioners, and we cultivated some really meaningful relationships that,
Right.
yes, have like financial benefits, but just, also just fuel life and become
Mhm.
something that's just more like fulfilling and rewarding. So there's so many
Exactly.
benefits to that.
Well said, guys. Well, thanks again for chiming in to this episode, and thank you to our listeners for their support. If you're interested in getting started with your own family banking policy and would like to learn the ropes, we would urge you to shoot us an email at thefamilybankingshow@gmail.com, and we will schedule a time to discuss the potential and possibilities for you and your family. All right, guys. Thanks again. We'll see you in the next episode.
See you guys.
Thank you for joining us. If you're interested in a conversation about anything we've discussed, you can find our contact information in the show notes below.
And subscribe, follow, and leave a review to help spread this message and to help families across the country discover the generational blessing of IBC. May God bless you, and we'll see you next time.